got the Russell leading the charge up 0.5%, and the rest of the markets here, being the S&P, the Nasdaq, and the Dow, are up 0.3 or thereabouts. Up 0.3 or thereabouts. So not a lot of strength in this market just yet. We got the U.S. dollar slightly down, bonds slightly up. Oil is trying to make a comeback here, almost 1.8% here, 73 cents. And gold's on a little bit of a charge here at 1.1%. So the only big tech that we have down right now is Amazon. We'll kind of go over Amazon and Zoom here. The rest of the big techs are moving up, and kind of the biggest mover here is Netflix, right? And then followed by Tesla. So IBM, Goldman Sachs are basically flat. Now we got the airlines coming back. They got kind of hit pretty hard there yesterday. And obviously with oil up, the oil stocks are moving up with them. So on the Dow 30, a big leader here of the Dow, being the most expensive stock, it has the greatest weight of the influence of the movement of the Dow, is UNH. And it's down $1.30 right now, 0.4%. But you can see majority of green with a few spots of red coming into play here. So let's jump over. We'll come into the charts here and we'll take a look and we'll kind of see where we're at. So let's come in and we will take a look, starting with big tech. Well, actually, let's start with the overall big markets here. So all right, there we go. All right, so major markets here coming into play. Let's look at the S&P to start with here. So on the longer term chart, being the weekly chart, we've got basically the S&P coming here, all-time highs in the S&P futures market here. And so we're way up there. And you can see here, this is where we had the initial selling, brought us into a beautiful retracement into that weekly demand level right there. So not a lot to talk about on the markets other than being up 4 weeks in a row. 4 weeks in a row. So kind of getting that extended means at some point here we need some form of a retracement at some point. Right? In these type of markets, just like this, you can see here on the daily chart, we just keep moving to the upward direction, and all we may get is just this type of action right here where we just come into play, and all we do is we go up, sideways, up, sideways. So here we could potentially just get the breakout that brings all the way into the highs right here. Right? And obviously with the selling at the highs right there, unfilled sell orders here that can get that retracement coming into play. If that was to happen, if we were to move up from here, this would create a demand level right here. And we could get a retracement back in that demand level to move up. So at this point here, we've got quite an extension here. You can see this is a 13 EMA right there. So we're way above the averages here. Now, generally when you get that extended away from the averages, you tend to get a pullback. Right? We get a retracement or what's known as a pullback. And all that is just like this kind of thing right here. That's your retracement or your pullback back to your moving averages, right? Back to your average prices. So that would not be unrealistic at all. So that would be actually very healthy in this market condition. So there's a lot of events happening. You know, you've got larger companies right now being paused on the coronavirus. What do you call them? Vaccines and trials. That all kind of happened yesterday. You get the election coming into play. So there's a lot of news going back and forth in this market. You've got banks coming out with earnings. Some are good, some are really bad, and the stock's reacting to them indifferently. So a lot of moving parts, a lot of kind of strange things happening. It's very defensive on your transactions, very defensive in transactions. So taking a look at the S&P, this trend line is kind of way out of whack here. So let's get rid of that one. But your trend line you'd be looking at coming right through here. And we got the breakout this morning. Now we're looking at that retracement. So right here, you're looking at your infamous 10 a.m. reversal. Right? This happens around 80% of the time. And this is a trade that we're constantly hunting for. Quick little day trade, highly probable, highly predictable. Getting right into this little area of proven supply by this right here. And we're getting that retracement. So looking for the retracement back into this 35.10 area. 35.10 would be a nice little area to look for the turnaround to then look for the trade back up. Now, this is going to have a big effect on big tech. Right? So now we could also come all the way down, fill the gap here. That's a very common play. Obviously, there's demand right here, and then there's demand just below us here. and that's coming off this play further back in here. So that's your S&P outlook. Let's jump over to the NASDAQ. And NASDAQ's kind of very, very important at this point in time because big tech is the driving force. So NASDAQ is up near all-time highs in the weekly time frame. You can see here on the daily chart, we had a small candle down, still closing at the previous day's closing valuation. So that's showing us strength. Right, today we've got a little doji so far on the daily chart. So we got a little bit of indecision here. Buys and sellers are agreeing on price right now with no move to the upside or the downside at this point. Right, so when we come down and we break this down, you can see on the 60-minute time frame right here, right, we've gone up and we're into a descending triangle right here. Okay, so there's a little level of support coming here off the 15-minute time frame, but we're in a descending triangle and looking for the breakout to the upside or the breakdown to the downside. And you've got demand here, but most commonly we'll look to fill that gap and probably come into this little demand level right into here at 11.7. It would be very, very, very nice right there. So look for the breakout to the upside at this point. Markets remaining strong. Right? Buyers keep coming into play here. We're going to get further and further and deeper into the earnings season right here. So every single morning and nighttime on the aftermarket close on your big tech stocks, right? They'll be releasing earnings, and on your New York Stock Exchange listed stocks will be coming out in the morning time. So you can see here, we get the upper trend line here. The upper trend line was respected this morning to the penny. So again, the 10 a.m. reversal coming down. Okay, now you can get all the way down into this little demand area here on the 10-minute time frame right here. So this is proven demand area by here, and that's right around that 12.068 on the NASDAQ. So at this point in time, NASDAQ is strong. We just broke above this pivot high here. What would have been better is a close. Having the candle close above there just shows that strength. Having the candle close near the top of the candle, that would give us a much larger indication of strength. Breaking above is excellent, but just not quite as good. So we did clear out all the supply off of this supply area, so we don't have to worry about this supply. So our next area of supply, and it's proven, is right up in here, So this is going to be next area of supply coming through here. And this is a proven area of supply right there. So you're looking right around the 174 area right there for the next area of supply. So we've got the coming off the 20 period moving average and 10-minute time frame, moving up nice and strong there. Let's look at one more here, and that's going to be the Russell 2000 leading the charge here. Markets are coming back almost to flat. So Russell has got above its previous pivot high in the weekly time frame. Still got a ways to go to get up to its all-time highs. A huge extended move. So this is the outperformer on the daily time frame in the last little period here. Now we came up, we filled the gap here on the 4-hour time frame, and we are starting to back away from that. Right? So coming in and filling that gap. Let's do the 1-hour chart here. Coming in and filling that gap on the 1-hour time frame. This is a daily .D chart, so that only shows us your intraday intervals, not the full 24-hour trading on the futures market here. So this is where we get the gaps from in the futures, is when we look at the .D chart. So coming up, fill the gap. All right, we're selling off. Now you're gonna have a little into this area here, but filling that gap, right, and respecting that supply is not a great sign of strength right here. So when we get down to this right here and fill the gap below us, we're gonna have to see which party's gonna win this battle. Is it gonna be the bulls, the bears, the buyers, the sellers? Right? And that's gonna give us a indication, kind of a clue on what direction the market wants to go here over the next few days. Breakdown below this. Right? That means we got money out of the markets, and that can then drag us down for a couple of days, which would be very healthy on a retracement. Right? So that's not bearish. It's not going to mean the market's going to be breaking down to any extent. It just means the market's doing what it should be doing, going up on impulsive moves and then having a corrected move coming down. Right? So keep an eye on this. Let's see where this goes. We can see earlier the S&P and the NASDAQ were pushing up. Meanwhile, the Russell right here is pushing down. Right? And it's kind of leading the markets are leading the charge at this point in time. So a couple stocks that have had requests for to go over and review. The first one is Amazon. Okay, so let's get this in here. So on Amazon, on the daily time frame, we're coming up near the all-time high on Amazon on the weekly time frame here. Now on the daily chart, here, we're looking at big breakout move of this base right here, right up into the highs, okay, and we're starting to retrace off of that area right here. So breaking below yesterday's low will be bearish. For Amazon right there. Right, now Amazon's going to have the potential to come in and fill this gap. Stocks and futures and markets like to fill their gaps. Right, now your demand level is going to be all the way down here at 32.25. Right, and that's going to be coming right back into your 50-period moving average. And that'd be a 50-day moving average, aligning with a support resistance area from all the way back over here, as well as your demand area here. So there's a lot of support and buying activity coming through at that 32.25 area. Now it's quite a fall for Amazon to take, right? But then we can get the boost to, if the market remains strong and bullish, that we can push us all the way up to new all-time highs. As we're just going to be able to take this supply area here out. And so that's in a daily time frame. Right? Now coming through in the smaller time frame, on the 1 hour time frame here, you've got a descending triangle formation right here. So breaking below that support line, right, of that descending triangle will be bearish, and that can get us down, like I said, into that 32.25 area. So that would actually be a very nice short. And you want to be watching the indexes here, like I just showed you on the Russell 2000, see if it starts to break down, see if the NASDAQ follows through with that. Right? That'll then give you the probability of a retracement in Amazon. Right? Now, stop loss would be just above here, 34.75. Entry, break below 34.21, and you can get a beautiful little short on Amazon right there for small risk for quite a large profit potential. All right, so there's Amazon. Let's go over to EBS. Okay, on EBS. On EBS, we've just had a pretty solid down week so far this week, coming into a daily demand area. Now, with this one right here is a beautiful demand level here on the daily time frame. Right? Now we've hit that demand level here, and we've seen some strength from the markets. But that's showing you by that longer tail right there. Right? That longer tail is your buying pressure pushing to the upward direction and upward moving. So let's break this down to smaller time frames and kind of see where we're at and what we need to do here. On the smaller time frame, we go all the way down to the 10-minute time frame here. On the 10 minutes, it's showing us some strength in, if we were to draw a trend line down through this area right here, we've broken above that trend line and we're finding support at that trend line currently. Right? So the way to enter into this is we can take a small initial position, right? Once this candle closes, and if we start to move up, so look above, say 97.50, we find strength in that, and then you look to enter that position. Right now, the supply here is already taken out, so you'd be looking at then the next supply coming through here as target 1. Okay, now if the market gets strong and it pushes higher, you can look for the entry at 97.50. Obviously, your stop loss is going to go below here, right, below the 95.80 area, below 95.80. If we break into this gap is where you can add to this position, because it's between basically this candle's low and this candle's high. There are no sellers to prevent it going higher, right? So look for the entry. Okay. Now, if we get down lower, right, there is demand here. Now, there's not going to be a lot of demand left there because we've already been into this area twice, and it did push up very, very aggressively. We do need the strength of the indexes to really manage us to push this through. Right? But if you can get that strength to come through, right, above 97.50 at this point in time, once this candle closes here, then you can look for that entry, stop loss below this low here. Right? So a fairly low risk transaction. Right? Breaking above this candle's high here, we can add to the position. So a great way to manage this with the uncertainty where the indexes are, because the indexes are already high with the potential of breaking down for the retracement. Right? Small position. Right, so this is what we call scaling into a transaction to minimize risk. Right? We're not trying to be a superhero here and make the big dollars up front, taking bigger amounts of risk when the probability is just not there in play, right? From the larger market perspective. Right, so you can scale into this small position here, adding to the position, the full position here, to then look for that much larger return on the upward direction. Right? This is a stock that's generally heavily accumulated. Now, on the daily time frame, we are way below the 50-period moving average. And you can see we get rejected hard by that 50-period moving average. And then we also got this gap down. That's probably a news event of some kind right there. So this would be, until we really see strength in this, okay, we'd be looking for more of a short play up in this area here than what I would for a long play down in this area here. Right? So we are currently in the downtrend, lower highs, lower lows. Right? And the best thing here is not really trading against the trend until we see indications of strength. And at this point in time, especially in the daily time frame, we don't have that indication of strength. Right? We still currently have lower daily highs on this, and we don't have higher closing prices just yet. So there's no indication buyers are present and strong. So if you're looking to take this trade, small position, okay, and then add to it on strength if that meets your rules and obligations there. So PLMR is another request we had. All right, so PLMR, last week we had a nice drop, nice retracement in the markets. Okay, now on the new time frame, higher daily highs consistently. Buyers are present. We have that strength coming into this market. So this is giving us permission to look at, okay, now what can we enter? Where can we enter? So on the 4-hour time frame, you have a great little demand level right in here, right at 84.58 would be your buy line right there, and your stop line would be coming right through just under these candles lows right here. Or if you wanted to, you can incorporate this candles low here at 83.27. So somewhat of a low risk transaction. We do need a retracement. We need a retracement just down below 85 bucks. Then you can look for your entry here and move the upward direction. Now, if we don't get the retracement, then we have to look for a breakout situation, breakout setup, and we could look at that on the hourly time frame, which we did receive today. So we'll come down now. We'll jump all the way down to the 10-minute time frame here. It'd be easier to demonstrate and illustrate here. So right here, we had a triangle formation coming right through here. There was a breakout. Now we've had the retracement off of the breakout here. So this is beautiful. Very strong move, close right into the top, retracement back down. Okay, now if we get the strength, okay, breaking above these candles highs here, leaving for the entry. If you want to wait and have greater strength in the market, go above this candle's high here. Right? Now if we go here, you're going to have a lower risk transaction because you can put your stop loss right below this candle's low. It should not break down lower than that if the market's going to remain strong and the buyers are going to consistently come into this position. Now, the beautiful thing here is this was the supply area through and taken out. You can see we've got massive big red candles through here. This means all that selling has been absorbed. So all the sell-offs are being absorbed right through here by heavy, heavy selling. So we haven't got anything to worry about until we get into around 92.50 here, which is a low of this candle here. And so there's a massive upside potential on a small amount of risk if this can show us continued strength coming into this position. Okay, so there's a great little opportunity on PLMR there today. If it can remain strong, push higher, okay, get the move to the upward direction, stop loss can go simply under here. And if it remains strong, we're into now this area before we can come all the way through. Looking at 92.50 is the first area of indication that you'd have to take some profit at. Okay, so there's a great little trade there on PLMR. Okay, just a quick little video for you today, quick little live updates of the market for you. Markets are still currently retracing down into where their starting points were. Right? If we look at a couple other ones here real quick, look at big tech. Right? Obviously, Apple is very important here, being a big influence in the S&P 500. Right? Apple had a triangle formation that we broke out of a couple of days ago here. Right? On Monday, big breakout, had the retracement. Right? Now we're moving up. Now this supply right here, right around that 123 area. There we go. So supply coming through right in here. We're having a little bit of a problem at that supply level. So if we start to respect that supply, right, expect Apple to break down, fill the gap, and get back into what was once resistance, now support. Right? And that'll give us a retracement on the major markets. Right? So let's quick look at Apple. Let's jump over and we'll take a look at, let's do a look at Facebook. Right, so 4 weeks up in Facebook, nice gap up, nice run up, right, into some selling right here. And on the weekly time frame, we got through that selling area there. On the daily, up we go sideways. So looking right now at a high base, looking for the breakout here. When we come down smaller, with a 60-minute time frame or even the 10-minute chart here, what you'll see is we have a triangle formation. All right, so big flagpole coming up, nice asymmetrical triangle here, looking for the breakout on the upward direction here. And Facebook get all the way through up into this area, 285, before we sort of see any sort of resistance or having to take profit. So wait and see on this. We're looking for either the break to the upside, right? If the market starts to break down and we're not respecting demand levels, then we can look for the break to the downside and look for the gap fill. So Facebook could go either way here. We've got a long breakout, or we've got even a short opportunity to the downside to look for a profit potential there. Looking at long-term transactions over the last couple of weeks, we've been looking at FOCS. Let's give a look at the update here. This has been a phenomenal transaction on the longer. Right, so we put this out here when we're back down in weekly demand, right around this $30 area. It's had a great move up, huge amount of strength. Hasn't even been able to trace here, and looking for the continuation of a breakout to the upper direction here. So this is up at 38 bucks. Phenomenal transaction there. Another one we're looking at here, PFSI. You see very, very similar situation here. Broke trend line, right? Beautiful move to the upward direction. You can just see it on a weekly time frame. This thing is just going continuously up. This is heavily, heavily accumulated by institutions right now. And two more, TSSO. Right? Very, very similar scenario. These are all a 50 moving average plays here, strategies here. And on the breakout there, small retracement back down to the 50-day moving average, and big, big, big move to the upward direction. And last one here, a long-term play is XM, which is we're doing a triple income strategy on, is working out phenomenally right now. So XM, let's look at the daily time frame on this. Let's compress this down a little bit. XM had a retracement all the way down to a previous demand level. It had the breakout to the upper direction, came into supply right here, retraced off, respecting demand right now, and looking for that next wave of next impulse move up, which should be coming in around $37 right there. So XM is a long-term play. This is a multi-year play. We're looking to get the 87 cents a share every 3 months, which is your dividend, pushing around 10% right now, as well as selling weekly options against it to generate a weekly income. Utilizing that weekly income and also the dividend play off this to buy the insurance to have a no-risk long-term investment, and this is how retirement portfolios should be built. So we'll go step by step through this, and we'll keep checking in on this each week, and we'll keep walking through how does that trade work out to provide you with the education that you require there to build these type of portfolios. Currently, I am in the process of writing an ebook on this strategy that will be releasing probably the next couple of weeks here. So keep an eye out for that. Keep a lookout for that. Very, very, very powerful strategy for your TFSAs, your 401ks, your IRAs, your RRSPs. This is how your self-directed portfolio and your portfolio should be built. Dale Sargo, Trader Boys. We will catch up with you very, very soon live in the markets.